All right, hello everyone, evening. All right, hi Uncle Fu. All right, if you can hear me right now, for the others, can you just drop a note and say hi as well, so I can get the session started and moving. Okay, once again, if you're joining us live right now, and this is your first time in a session together with me, right? Please click on the link that you'll find in the Facebook post, www.streamyard.com/Facebook. Okay, right now that will allow us to see who's leaving comments, right? Who's leaving comments at the back end of our screens over here, right? Like Wayne over here. Hi, Wayne. All right. I can actually see who's commenting on the screens, all right? Because as I said, we do have Facebook users. I have two of you over here. That's one, right? And then we have another one over here. All right, okay, now, so if you are still not approving StreamYard.com/Facebook for the views to your Facebook page itself, all right, please do so. All right, so we'll be able to see and know who's leaving comments for us over here. All right, now let me try to estimate who it might be over here. Right, I believe it might be KT. Yeah, all right, okay, KT. All right, I think it might be you, all right, and Tae Lee Hua. All right, I believe it's KT Cho and Tae Lee Hua over here. All right, could you just go to the Facebook post itself, all right, for this live session? All right, you see a link called www.streamyard.com/Facebook. Right, and just approve the posts, all right, approve them for Facebook usage. Right now, thank you very much for joining me 15 minutes ahead of market opening. All right, 15 minutes ahead of market opening, because what I want to do over here, can you hear me, everyone? All right, if you could hear me, can you just type the word sound? All right, so I know that my vocals over here are working fine. Let me just check my mic again. Test, test, test. It seems working on my It seems working on my end. All right, could somebody verify if my sound is working okay? All right, so I know I'll be going, yep. Oh, thank you very much. Okay, all right, now, so if my sound is working fine, Simon, do check, all right, on your end over here, what's going on, yeah? All right, now, so thank you once again for joining me 15 minutes ahead of market opening, right? Because I wanted to take some time to bring to all of your attention what I've been talking about, the dangers of the market over and over again. Okay, all right, and I want to bring to your attention right now what should be a better plan, all right, how you should handle the markets going forward. Okay, now I don't want to sound too bearish over here, because yes, there is a lot of threat happening in the markets right now. Okay, but it doesn't mean that you have to go all bearish right now. Okay, because market doesn't go up in a straight line, and just the same way, market doesn't come down in a straight line. Okay, so usually after a big severe sell-off, right, the key right now is this: don't go chasing the market. Right, we all know this. We should never ever chase the market. All right, now please pardon my lighting and the backgrounds, because I'm not doing this session at home today. All right, today is the last day of the Chinese New Year, so I'm actually at a gathering right now. I'm just taking like half an hour off from the gathering to run this session together with all of you. Okay, all right, now. So let me get back up to date over here. So what I really want to do is to bring to all of your attention what's happening right now. Number one, we all know that the market is in a bubble, right? Okay, now if you're gonna ask me, Terence, how do you know that the market is in a bubble? Right now, because right when the market is actually in a bubble, right, and if you're new to the markets, that's when you realize, right, you may not actually be wary that the market itself is in a bubble. Right now, you see, I always try to maintain that I have no bias over here, and I have no ego when it comes to the market, right? Because market is always very apt at teaching all of us a very, very valuable lesson, all right? So don't go fighting with the markets, because you should never do that, okay? But what's really key is this. Number one, all right? The key right now is to think, right? Do you feel that market is overvalued? Which means, all right, do you look at companies and a lot of stocks right now, and do you feel that a lot of these companies are actually very overvalued in terms of stock price that you're seeing them trade at? Yeah, all right. Now, if you feel that this is so, yeah, all right, then you need to be very, very wary, Right now, let me just bring to all of your attention, since you're seeing my screens right now. Okay, a lot of my students will probably be very, very aware of this stock, right? I was just having a discussion over a coffee session with one of my students, right? And I was bringing to attention that, this is one stock that, we have always looked at over here for the longest of time, all right? For the longest of time, all right? Now, and when we were looking at this stock, let me zoom up. All right, Uncle Fu, you should be very aware of this as well. Right, when we were first looking at this stock, when I started the community about 5, 6, 7 years ago, right now you'll be aware that this stock was actually trading at only like $20, or I think in the tens. Right, but you would not be, you'll not realize that in the last 10 years, right, a company like this would have actually shot up to $300. Right, and look at the name of the company. It's WD-40. All right, now what innovative product have they come up with, right, in the last 10 years? Right now, because if you realize that their product has stayed the same, all right, which is WD-40, yeah, right, then you really be questioning what's going on over here, yeah, all right, what's going on, especially since this breakout move over here. Let's try to see when that happened. Yeah, all right, now so the breakout move happened on, this is a weekly chart. All right, so it happened in October. Yeah, all right. So what changed on October 2020, right? That brought the stock from 200 all the way to 300, right? That's like a 50% move, even after it's moved by so much. Yeah, right now. So this literally shows you that the market has been really in a bubble over here after all the money printing that the Federal Reserve has gone into, right? But let me try to put this across in the simplest manner possible. Yeah, right now fundamentals are stretched, right, and they're stretched to a level that many of us who have been investing has never ever seen such levels before. But you must also understand this, right? When we reach the last phase of these kind of bubbles over here, right, market is guided by pure emotions. Yeah, right. Markets are now no longer guided by what we think rational thinking over here or valuations. No, all right. Markets are just buoyed right now by pure emotions, right? Which means this, right? If there is buying, right, it usually leads to more buying. All right, okay, it's just like a herd-like mentality right now. If people are buying, all right, you just get more people buying. Yeah, all right, and higher prices basically just gets higher. Yeah, okay, as we've seen over here on this chart, it's very evident. And it's not just this, it's things like Tesla, things like CrowdStrike, they're everywhere. All right, if you look at the stock market, there's so many hot stocks that have just been doing that, right? Because buying just gets more buying. All right, so higher prices basically gets even higher. All right, now it defies any logic or any reasons they can put behind this kind of moves that's happening in the markets. Yeah, all right, now so this is all down to pure emotions, the fear of missing out. People wanting to make money, people don't want to miss out on this golden opportunity, as they call it. Yeah, all right, now this is all pure emotions. And all right, and you must understand one thing, this is what bubbles do. Yeah, all right, that's what bubbles do to people, all right, until it gets popped. All right, until it gets popped. All right, now, so last time, about almost 1 year ago, all right, we had the total opposite. What we had was fear, all right? It was immense fear over here because of the market crashing, all right, due to COVID pressures and stuff like that. But 1 year later, what we have is a total flick of a switch, right? We have the extreme end, which is pure greed instead. Now, so we have always heard, one of the greatest investors say this, right? You should be very fearful, all right, when everyone else is greedy, right? But you should be greedy when everyone else is fearful. Right, so think about what your emotion should be right now when it comes to the market. All right, and all I'm going to say is this. All right, what we've seen in the markets, right, in just the last 1 week alone, right, may only be the onset. All right, now why do I say it's only the onset? Okay, because if you look at what I'm sharing with all of you right now on the screen, okay, what I have right here is actually a weekly chart. Right, so this is actually what we call a long-term chart over here on the entire index. Okay, all right, now, and what you see over here is a potential problem. Right now, why I say it's a potential problem is because, okay, what we have over here, all right now is basically a divergence forming on the indicators. Yeah, all right, okay, so the stocks are leading a higher charge, which means, right, that you should see a like-for-like follow in the indicators. Yeah, all right, but that's not happening. All right, but what's the biggest danger right now is really this. The biggest danger happening in the market is actually this. Oops. Right, this part over here. Yeah, all right, where the MACD over here is actually looking like it may turn. Yeah, okay, and that will actually be the main threat of the market over here. Because if this is a weekly chart, all right, it basically takes the, it takes the market longer, right, to actually get these signals to turn, right, because they're week for week, right? We're not looking at this day for day, right? And usually longer term signals are more valid, right, than what we call shorter term signals. Yeah, okay, now, And oscillators over here, anybody who has studied charts and know a little bit about charts, the one thing you know is oscillators like RSI, yeah, all right, they always fully oscillate, which means they always go in a cycle from 30 to 70, all right, and then back to 30, and then back to 70, and then back to 30 again. That's just how the indicators work. Yeah, all right, now that's just how the indicators work. Right now, let me try to bring it to a shorter time frame right now. Okay, so we're seeing the same divergence happening, all right, in the shorter time frames as well. Right now, if all we are talking about right now is this, right? If the selling does get severe enough, right, it should literally bring, right, the S&P back down to the 30 level, right, in the RSI indicator. Now, if it brings it back down to the 30 indicator level, right now, the reverse engineering RSI actually points out, right, that the index or the S&P 500 should hit 363. All right, that's on the SPY. So if we're talking about the S&P 500, that means we should be looking at somewhere around 3630, right? 3,600 over here. And we're still at 3,820. That means, all right, the market selling may not be done, all right, it may not be done until we reach another 200 points lower. Yeah, right, another 200 points lower. And, we can't really say that that's not going to happen. Yeah, right now, because, there's certain things that we need to pay attention to right now, okay, that would actually cause a lot of concerns in the market. Right now, if you still do not know it, right, one thing that's breaking the back of the market right now is actually the bonds. Yeah, right now, bonds, because as the lower price, as the bonds go lower and lower, right, as you see on the chart over here, as it goes lower and lower over here, all right, so as you see the bond prices over here goes lower and lower. Actually, on the flip side, what's happening over here is that the interest rates are actually going higher and higher. Yeah, right, because bond prices are moving in total opposite of the interest rate itself. Right, so this interest rate, I'm not talking about what the Federal Reserve does. No, that's the central bank interest rates. But these are the market traded rates over here. Right, that means these are what professionals do. Yeah, right, in terms of anticipating what the market is going to react to. Right, so the professionals are basically now pricing in, right, a higher interest rates right now. Right, so one, it points towards inflation right now. But on the onset of it, which means when we see this initial downturn over here, right, and we start to see these interest rates starts to go up, right, it actually is something that is good for the financials. Right now, why do we say this is something good for the financials? It's very evident because if you look at it, right, the bond prices started to really start to fall somewhere in the beginning of January, right, and it got more severe somewhere in the beginning of February. All right, now if I take you to the XLF, which is the financial ETF sector, right, now you realize that at the start of January, towards the end of January, right, it hit a bottom, right, and it started going on almost a parabolic move over here, right, for the entire month of Feb. All right, and this we're talking about the ETF. All right, we're not talking about individual banking stocks, but we're talking about the entire financial ETF. So as a sector, as a financial sector as a whole, all right, it's just led this upward charge of new highs in the market. All right, and we all know this if you're traded long enough. As long as the financials move, all right, it will move the entire markets. All right, the rest are just tag along. But of course, in the more recent terms, all right, if the trillion-dollar market cap companies move as well, all right, it could literally stretch the market as well. But the key has always been this: if you cannot get the financials to participate, right, the move will not last. Yeah, okay, so only a lasting move over here, right, will happen, right, when the financials are playing the same music. Right, so right now, okay, as of last week, what was happening was this. All right, the entire market was correcting. We are having those 40 point down days, 50 point down days, 60 point down days, and then after that we see a recovery. So we have the initial down, and we always see a recovery towards the end. Why? All right, now the reason why is simply because the last few times the market sold off, right, the financials were not joining in. Right, the financials were not part of the sell-off. Right, so it was the tech stocks and it was the staples and stuff like that. All right, all the companies that were pretty much very overvalued. Right, so you had sectors like the technology sector, all right, that was leading the charge down. Yeah, all right, okay, but definitely not the financial sector. Okay, right now another concern that I have is this. Right, so right now as bond prices come down, right, okay, so bond prices coming down will literally mean that interest rates are going up. Now, if we all read about economics and market cycles, right, one thing you'll find out is this, right, the last cycle of the market, right, is also always when, right, the energy stocks and the oil stocks starts to move. Yeah, all right, now they call this as an inflation hedge. Yeah, all right. That means when people want to hedge inflation risk, right, they usually start to push up all these commodity prices, right, and more so oil stock prices. Now, so oil prices have also gone crazy. As you look at this XLE, which is the energy sector ETF, right, they've gone equally parabolic, right, since the start of February, right, together and in line with the bonds. Do you realize that? Yeah, right. So the financial sector and the energy sector, right, which has been laggards, right, which has been laggards. Let me show you this. If I have to put it in percentage, let me try to see how I do this over here. Uh, ba, 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 ba. Price axis. There we go. Yeah, all right. Now, if we were to see this over here, the oil sector, right, or the energy sector, actually, was down by almost 14% as of November. All right, as of November, right, and then it was still lagging the market until the month of February. All right, okay, and right now it's up the year for about 37%, right, since the start of the year. Right now, let's look at XLF. All right, XLF has done the same thing over here. All right, started the year very much flat. All right, okay, and then after that, it lead a charge upwards. Right, so this is absolutely crazy movements over here, right, from two sectors that have been lagging in the entire market, right, or basically to make it simpler to understand, that has been lagging in the entire bull market of 2020, yeah, all right, after the COVID market correction, yeah, okay, now, so the key now is this: if tech sector continues to weaken, all right, so if tech sector continues to weaken, all right, and then the financials start to get dragged down, yeah, okay, what we have right now is we have the correlation in the entire market, all right, because you have the XLF, or the financial stocks, which weighs in at almost 30% of the entire market, all right, or the S&P 500, right, and then you have, the, how do I say this, you have the 20, Uncle Fu, I just saw your comment. Yes, Nike was at 50, Coca-Cola at 30, and so much more, right? They're all at crazy, ridiculous prices right now. Yeah, okay, now, so what I was trying to say is, if these two sectors drag the market down, you have big tech stocks, that means the $1 trillion FANG stocks over here. All right, now they weigh in about 20% of the S&P 500. And then you have the XLF, which is between 25 to 30% of the market. Do you realize that's half of the S&P 500? So if you have both, you have half of the entire S&P 500 weightage dragging down the market, you're going to go crazy. Yeah, right? You're going to go crazy. So one thing you need to pay a lot of attention to right now is really this. All right, okay, what's going to happen in the financial stocks? Yeah, all right, you want to see if they're breaking any support levels over here. Yeah, all right, that's the first key that you want to see. Right, and another thing that's happening and worrying right now, okay, is really this: the darlings of all darlings. Yeah, all right, okay, another thing you need to be very, very worried about right now is the darlings of all darlings, right, and that's Tesla. Yeah, right. You really need to be very worried about Tesla right now. Okay, there are a few signs over here. I'm not bashing the stock. Yeah, right. I'm really not bashing the stock, because I do think that they make really, really nice design cars, right? And of course, with the technology of EVs, which what economies are pushing towards, right? They may have a case for it, right? But I also have an argument against it. Yeah, all right. Now let's have a look at this. I'm not trying to get too emotional, like I said, all right? But what we have over here is this: we have a sell-off, all right, since the beginning of the year. Right, but this sell-off is not sudden, right? This sell-off has already, like we said, the drawings have been on the wall, right? Now, why do I say the drawings have been on the wall? Look at this, right? We had the higher high over here, all right? Okay, we may call this the last end of it, because, right, as you see the stock hit a higher high, you actually see a divergence happening on the RSI, and not only on the RSI, but also on the MACD. Right now, you will have, and you can actually see a divergence on the RSI happen more often, right? But a divergence on the MACD, right, is usually very seldom. Yeah, right. And they're usually something that you should follow more religiously, right? But when you have both these indicators showing you this, right, that's definitely a clear sign that you should not go buying more Tesla shares or going long on Tesla shares at those kind of price levels. Yeah, right. First, it's already ridiculously priced. Second, right, with these kind of technical indicators going against you, right, what you're literally doing right now is you're trying to swim against the waves, right? And you know the effect of that, right? No matter how great a swimmer you are, right, if you're trying to swim against the waves, right, this is not going to happen, all right? You're not going to move anywhere. Yeah, all right, but you may end up drowning at the same time. All right, so don't do this to yourself. Okay, all right. Now, so before I go further, let me gather some of your help over here. If you do find that what I'm sharing right now is very valuable, right, it may help some of your friends who are also trading the markets or maybe trading Tesla stocks as a whole over here, right? They're very vested into Tesla stocks, right? What you may want to do is help me share this video, right, with a post over there and analysis of market and Tesla's participation right now. Yeah, okay, so it bring to their attention to really watch the video as well. Yeah, okay, all right, now, thank you very much for doing so. Okay, now, let's move on. Okay, now, so what I really want to say right now is the trend in Tesla. Why? Because we're continuing to see the weakness, right? Okay, so not only the divergence, but, this weakness has continued. Yeah, all right, it's not stopped. Yeah, all right, if you look at it over here, it's just got weaker and weaker and weaker and weaker. Yeah, all right, it's not stopped. Yeah, all right, okay, now, and the worst thing right now is this. If you look at the MACD, right, not only has the secondary signal, right, changed the tone of the market, but now the entire MACD itself is below the zero line, right? That means the primary trend for Tesla is also down right now. Okay, so if you want to add on those stocks, all right, really don't go buying the stocks right now. If you have the capital, you know what you're doing over here, yes, you maybe can nibble into selling some put options and stuff like that, but don't go buying the stock outright. Why? Because there's a lot of trend right now. Okay, now let me show you the trend. First, right, we obviously have the $750 support level, which I've written in some of my articles this week, right, that I warned about. We clearly broke it with this candle, right? It was a very clear break. Right, and it was sudden and swift hard movement the next day, right? And of course, we have a snapback rebound, right? But look, the snapback rebound hit 750, right? It hit that resistance level, right? And then we had the next sell-off. Yeah, right now. So the key right now is this. If you want to go long on Tesla, right, you should not want to get in unless there's a clear break back up of these 740 levels. Yeah, right. So the resistance you can see is about 745. Right, so if you really want to go long on Tesla, it will make a lot more sense if you try to go long, right, when it cuts back above 745 very strongly. Now, why? Because if it doesn't, all right, right now it's sitting on another support level at about $700, right? If it breaks 700, which is a psychological level, right, the next level over here is really 650, right? The last breakout over here, right? Okay, 650, and below 650 is really 600. Right, and the problem now is this: after 600, yeah, there's only really 500. Yeah, okay, there's only really 500 right now, and there's another more worrying trend that I have over here. Right, a more worrying trend is when I drag the whole chart on a longer time frame. Right now, why do I say I have a more worrying trend? Because now, if you let me erase all the drawings. Sorry. All right, now, so if I remove the drawings that I just did just now, can you see that the divergence is also happening just the same on the weekly charts? Yeah, all right, so as the stock was pushing very much higher and stronger over here, all right, the divergence was very clear. And the next worrying sign right now, everyone, right, the next worrying sign right now is this, right? This trend now has turned also for the MACD on the weekly charts. Yeah, all right, it's also turned down for the weekly charts over here. Yeah, okay, now, so it's going to be much harder, right, when you try to argue a case of bullishness, right? When you try to argue a case of bullishness, it's going to be much tougher. Yeah, okay, so we have this RSI sitting at about what, 56 levels right now. Okay, 56 levels right now. Of course, we may actually see it cycle back to 30. Now, on a weekly chart, if it cycles back to 30, right, what the indicator is estimating is a price of about 143. Now, that may be a bit drastic. Right, but okay, if we say we just expect the RSI to cycle back to say 50 levels, let's not take 30, so let's take 50, which is the middle ground, right? Let's see what kind of prices we may get over here. Right, they're still estimating almost something that's below 300. Right, this is absolutely ridiculous. That's 318. All right, now, so can you imagine? And 318 is not, it's not like a point where there is no how do I say, there's no indications, because 318 is literally another breakout point. Yeah, all right, can you see this breakout point at about 330 over here? Right, that's literally another breakout point over here. All right now, so if it starts to go in a free fall, right now, I don't have a drawing tool. All right, so many of you will realize this. What goes up in a parabolic way, all right, has the same opportunity of coming right down in the same parabolic way. Yeah, so please understand that that is a very clear and evident danger. Right, that's a very, very clear and evident danger over here. Right, you might want to pay very serious attention to that, because it's not new. This divergence in Tesla has been playing out over and over again. Right, when it went higher over here, there was already the first divergence. Yeah, right, and then when it pushed higher the next time around, all right, there was a second divergence over here. Yeah, okay, all right, now, so you be aware. All right, that's all I can say over here, because if this giant over here free falls, right, before it was included in S&P 500, I don't care about it, right? But right now it's part of the S&P 500, which means this stock can actually lead to the crumble of the entire market itself as well. Yeah, okay, all right, because this stock may drag the others, and when it drags the others, entire sector drags along with it. Yeah, okay, all right, $1 trillion stock, Microsoft, right? It's not making new highs. Yeah, all right. Okay, Microsoft has fallen from the new highs over here. Yeah, all right. And there's also divergence. Look at this. Yeah, all right. There's also divergence on Microsoft. Yeah, all right. So be very, very, very careful over here. Apple. Let's look at Apple. All right, divergence all around. Yeah, all right. Look at the indicators. All right, the prices are all moving. Yeah, all right. But there are all these divergences that are happening around. And like I said, pay attention. Right, divergence on the RSI, divergence on the MACD. Yeah, all right, okay, now, so be very careful right now when you're going and investing into very heavily valued or overvalued companies. Yeah, all right, okay, so do so, with a lot of caution over here. Yeah, okay, all right, now, so that's my little take on the market over here. So what's expected of the markets in the near term? All right, so let's go back to SPX over here. All right, now, so we had this severe sell-off. Okay, we are right now at a key support level, okay, which is 3850, 3840. Right, we may actually see a bounce. Okay, we may start to see a bounce over here. All right, but okay, the key right now to pay attention to is this: if we see a bounce, okay, the bounce needs to make a new high. Okay, because if it fails to make a new high, it simply means now that the bears have the control. Yeah, okay, because if the bulls are strong enough, okay, and they're going to turn this market, they have to turn it and push it to a new high. Okay, if they're not capable of doing that, that means it's the first indication that we may see a change of the trend. Okay, and if you couple this together with the sensitivity of seasonality, all right, so the end of Feb, the beginning of March is always a period of weakness in the market. All right, we had the market crash in COVID over here last year, right, which crumbled the market at the end of Feb last year. Okay, and then we had, I think 2 years ago in 2018, right, where it was February, March, where the market also crumbled, all right, in a flash crash manner. Yeah, okay. Now, so we may see a very, very sharp 10-20% correction, right, before April, May sees the next up wave. Right, so if anybody out there tells you, all right, now the COVID market crash has already done it. Right, we are in a new 10-year cycle. Right, be very careful. Okay, be very, very careful. Right, that's definitely not the case over here. Right, because when you are in a new 10-year cycle, right, remember this, right, markets don't go up 60-70% in the first year. It never does that. Okay, yeah, all right, so go ahead with eyes wide open over here and be very, very wary. Okay, all right, everyone. Okay, now, so let's go back to the portfolio. Okay, is this good, everyone? Yeah, all right, if it's good over here, leave a comment in the chat box. Let me know if it it added value in terms of your understanding of the markets and where the trend lies. Right, so number one, pay attention to the TLT. Oops. Right, so number one, pay attention to the TLT. Yeah, all right, because if the TLT continues to break new lows over here, right, it means that interest rates are continuing to go up. All right, so instead of helping the banks, right, it's going to cause big concerns of inflation. Right, inflations that are too fast. Yeah, okay, all right, now, so you want to be very wary of that. It may actually end up, how do I say this, turning the financial sector stocks. Okay, so when it does that, it's going to be fast and furious. Right, so that's going to drag the market down. Okay, number two, you also want to pay attention to the XLF and the XLE. Okay, all right, XLF and XLE, all right, because if this participates on the downwards, let me change this to the dailies. Right, so if it continues to come down over here, right, there's going to be a drag on the market, right, XLF and XLE. Yeah, okay, all right, and lastly, like I said today, right? You want to pay attention to this big little boy over here called Tesla. Yeah, okay, all right. You want to pay attention to this big little boy over here called Tesla. Yeah, okay, all right. Now, don't go jumping into Tesla right now, because one thing definite is the MACD, right? As you can see over here, the slope, the steepness of the slope is almost like at a 45-degree angle. Yeah, all right. It means that the selling is not done. All right, it's nowhere near done. Yeah, okay. So even if you want to get in, try to time a bottom over here, you might want to wait for the indicators to flatten out. Yeah, all right, MACD to flatten out a little bit. All right, it shows that selling may be slowing down, right, before you try to get yourself in. Yeah, okay, all right. Now I'm talking in terms of the stocks. Okay, right. If you're more apt in terms of selling options, or you want to explore the idea of selling options, then it may be a different ballgame. Yeah, okay, just like my students over here and my trading community members, all right, we have started to establish some option strategies to capitalize, in a very risk neutral method, all right, and yet capitalize on these market movements right now. Yeah, okay, so if you know what you're doing, yes, there are still bountiful opportunities and can be done in a safe way. Yeah, okay, but if you don't know what you're doing and you're just buying stocks right now, and more so buying growth stocks, right, you want to be very, very cautious and careful, okay? Yeah, all right, cautious and careful. All right, now, so let's go to our portfolios, all right, as promised over here. All right, now, so let's see what our portfolio is doing right now. So let's check on our positions first. Okay, so if you're new and you're joining just to hear the market analysis, let me also welcome all of you, because in this weekly segment, what I do is I highlight to participants, all right, and build together with them, all right, a portfolio based on good company stocks, all right, and a well-managed portfolio over here where we take trades live on good value companies over here. Now, so as of right now, we do have positions in AT&T, all right, for 16th of April for 28 strike. All right, let me have a quick look at AT&T right now. I don't think AT&T has much movements, so I won't be managing that position right now. Yes, right, no management actions. The VIX has shot up yesterday. All right, so I have a quick look at that and check what's the premiums right now. All right, so we do have the 17th of March 21 puts over here. All right, it is now going for about 40 cents. All right, so it's not died down too much. All right, so I'm not going to manage it right now. All right, we do have a trade on Verizon as well. All right, so Verizon for the 12th of March. That's an interesting one. All right, Verizon on the 12th of March for the 56 strike. Let's have a look at it. It's at the money right now. So no management actions. I have a trade on Kellogg's. Kellogg's has done well. Yeah, all right, Kellogg's has done well. So that looks fine over here. Yeah, okay, all right. Now, next one over here is CPB. No management actions. All right, so I won't be managing any of my positions today. All right, my portfolio exposure right now on use of capital is sitting at about 64,000 right now. Okay, so I will be looking to add. Yes, I am looking to add. Okay, yeah, all right. Now, so what will I be looking to add over here today? All right, what I'm looking to add into would be, let me have a look. Okay, I'm going to add a position in on healthcare today. All right, okay, so what I'm going to do is I'm going to target Cardinal Health. Yeah, okay, now, so some of you may be asking, Terence, why healthcare, why Cardinal Health? Let me give you my decision process again. All right, one, I'm only tackling some of the longest established, fundamentally strong companies. Second, CAH, Cardinal Health, is a dividend paying company. All right, and it's also only trading at a PE ratio of 11. Yeah, all right, so dividend paying company plus undervaluations in a currently overvalued market, right? Plus healthcare being usually a defensive sector if markets were to correct, right? Puts me in a good position over here that I'm interested in. Okay, now, so let's gun for the trade that I'm looking at right now. Okay, so I'm going to be looking at 16th of April. Okay, so I'm going to give this stock a little bit of a time over here, about 7 weeks, if I'm not wrong, right? 7 weeks. So 50 strike, all right, I'm going to do the 50 strike over here, all right, and I'm going to aim for about 170, all right, so I'm going to try a 170 over here for the 50 puts. Yeah, okay, so let me put up the orders over here. Let me find my platform. Oh man. All right, hang in for a bit. All right, my other trading platform closed up earlier. All right, probably down to the resources. Yeah. All right, now, so CAH is definitely one that I'm adding over here. I may consider adding another position, all right, but it all depends on what's my current market exposure or portfolio exposure. All right, let's do a quick analysis over here, CAH. If I were to add that position, all right, trade number is 38, all right, CAH. Oops, give me a minute. All right, if I do a 50 pips, hang on. All right, great. Okay, all right, now, so we're doing this on 26th of Feb. Okay, I'm doing the 16th of April. Okay, this will be for 170. Yeah, okay, now how much would that add? 15,000. So that will put me about 80,000 exposure, which is about 80% of the portfolio. Okay, I think one position would work fine today. Right, I do see a lot more sell-off. Right, so if you want to take bearish positions on your portfolio, right, do so on a bounce day. Yeah, okay, not today. Right, we just had a severe sell-off, a 90-point sell-off yesterday. Right, do not add to your shorts today. Right, it doesn't make sense. Right, add shorts into strength. Yeah, all right. Okay, now if you want to buy on bargains over here, buy onto weakness. Right, don't buy when the market is up. Yeah, okay, that's definitely not what you should be doing right now in these markets. Okay, all right. I'm just waiting for my trading portfolio to how do I say this, software or trading platform, yes, right, to load up, all right, so I can place the trades and the orders. All right, once that is done, right, we can get out of this session. Yeah. Okay, while waiting for that, if any of you have any questions about the details that I've covered in today's Facebook live session, all right, please feel free to start typing out. All right, please feel free to start typing out into the comment section over here. I'm more than happy to address some of the questions. Yeah. All right. Hey, Jeremy, how are you? How have you been? All right. For those who are not aware, Jeremy has been very, very, very busy. He's been a busy man. It's moving very, very slowly, everyone. Give me some time, okay? All right, the bandwidth is taking a lot of resources on the back end of my computer, perhaps. Yes, it's taking a lot of resources. Okay, all right, now, so I'm gonna go ahead and place the trades over here. All right, so 16th of April, all right, hang on. So 2 contracts of that. Oh, sorry, 3 contracts of that. All right, at 170. Okay, hang on, submit, accept, transmit. Oh, we failed, we're done. All right, I'm done over here. All right, give me a minute, I'm just gonna pull it up so all of you can verify that. Hang on. Very, very frustrating. I can get it to move. All right, hang on, everyone. I'm just gonna do this. Okay, I can't move the screen, so what I'm gonna do is I'm just gonna change the screen that I'm sharing. Okay. This is what happens when you're not doing it at home. There we go. All right, now, so here you see it over here. I have, okay, right now. So I CAH over here, April 16, 50 puts, sold 3 contracts over here for 170. All right, 3 contracts done for 170 over here. All right, so this is filled. We are done. Okay, all right, so let's go back. Oops. All right, so we're filled, we're done over here. So it's 170, all right, it's filled. So the trade is live and moving. All right, so the trade is live and moving. We've collected $510 in option premiums on this trade. We have to set aside $15,000 in case we have to buy this stock, all right, on expiry. So that will be it. What's the ROI on this trade? Okay, the ROI on this trade is gonna be $1.70 divided by $50 a share. So that would set us at, oh man, it's not working. All right, 170 divided by $50 a share, that would be 3.4%. All right, so this is a period of 7 weeks over here. So divided by 7 weeks multiplied by 52, that will make this trade a 25% annualized ROI. All right, okay, 25% annualized ROI. Yep. All right. On your Excel, I did not add up to OBP of because I do have another 1,005 over here. All right, I own 300 of Nokia shares. Right now, this has already expired worthless. All right, okay, as of last week, this is expired worthless. Yeah, okay. All right, but I still own 300 shares of Nokia, all right, from assignment. All right, so that takes up $1,500. Tanya? Yeah, all right, so Tanya over here says, how come it doesn't add up? All right, okay, now, so this is just a mathematical formula, all right, so whatever numbers there is that, you know, requires an investment, all right, so it just adds up on an Excel sheet. Yeah, all right, now, so right now, after opening up the trade on CAH, I'm taking out about $79,200, okay, out of a model $100,000 portfolio. Yeah, right, out of a model $100,000 portfolio. Okay, all right, now, nobody else with any other questions? Yeah, all right, now, if you're asking about KR's option expiry today, all right, I will be covering it after I close off this session, all right, so not to worry. Yeah, okay, not to worry. I'll be covering it after end of this session back into the graduates group. Yeah, okay, all right, now, so that will be left after. Okay, I'm just going to leave it for another 1 minute to see if there's any further questions I'm going to be getting. All right, if there isn't, then I'll call it a close over here for today's portfolio building live with Terence over here. Yeah. Yep, Zig. I thought that comment came from you. Yeah, all right. I promised you. All right, so I'm gonna do it. Yeah. All right. I'm never, ever, never, ever touching any options on GameStop. Yeah. All right. It just doesn't make sense. Yeah. All right. When you want to invest, all right, are you an investor or are you a gambler? All right. If you're a gambler, by all means, go to GameStop. Yeah. All right. Now, I've said this many times again. All right, I cannot say this enough. All right, but whenever you trade GameStop options, all right, you're just throwing money into the ocean. All right, now why do I say you're throwing money into the ocean? Look at the bid-ask spreads. All right, look at the bid-ask spreads over here on each option. Yeah, okay, all right, now let's say you want to trade the nearer expiry, let's say 21 days, 19th of March. Yeah, all right, how are you going to trade it? All right, the bid-ask is so wide. All right, you're going to lose money getting into a trade. You're going to lose money getting out of the trade. All right, and now, right, this is still normal. Right, can you imagine what happens when, you know, GameStop had a crazy day? Yeah, all right. If it has a crazy day over here, the bid and ask is just going to get so much wider. Yeah, okay, all right. Now, I don't know who the Facebook user is. I mean, I can't address you by name, all right? But with me and in my community, there's one thing that we do not do, and we will not trade meme stocks. Yeah, all right. I do not trade meme stocks, okay? Because we make sure that the first thing we do over here is we protect our money. Yeah, all right. We protect our money over here. All right. So unfortunately, I cannot satisfy your urge. All right. I apologize for that. Yeah. Okay. But yes, I would never ever trade meme stock like GameStop because there's just no logic. All right. What logic is there? Yeah. Okay. All right. Welcome, Herbert. Okay, Tanya. Conviction to enter. So Tanya has a great question. Why is there such conviction to enter the sell option on this portfolio today? Yeah, okay, all right, now simple. All right, now one, when the market goes down, right, first you must understand what are the defensive sectors, right? Number two, right, when an overvalued market is selling off, where do you think the market needs to put that money, right? The market needs to put that money from dangerous sectors to the safe sectors. Yeah, all right. So market needs to move the money from dangerous stocks to safe stocks. That's why you have always heard of this thing called sector rotation. Yeah, okay. But when a market comes down, they're just moving money out of overvalued stocks into the undervalued stocks to do whatever they need. Maybe to park their money for the short term. Yeah, okay, before they move it back again or something like that. Okay, all right. But the second case is also very simple, right? If you have a great company that's profitable, yeah, okay, that means it's making money. There's no problems to it. Just that maybe investors don't like it because they're chasing after performance. So these stocks are left behind. Okay, now, but because they're left behind over here, they have already been sold off. So even if the market sells off, how much more do you want to sell off these stocks? Right? Because first, yeah, right, the people know that these stocks are cheap, right? But they don't want to buy it because these stocks are not moving. All right, so the fund managers don't buy it because they're not moving. That means on their portfolios, they cannot show performance. Yeah, okay, so while they chase after performance stocks, they're going to leave these stocks behind. But whenever danger comes in, right, that's where they're going to put their money. Yeah, okay, so that's why you've seen the last market sell-off over here, right? You saw all the undervalued food companies like General Mills, companies like Hormel Foods, companies like Kroger, yeah, all right, all these were undervalued companies, right? But they shot up, right? Even Kellogg's, they shot up, right? As the market was selling off, these entire food sector stocks were going up. Right, they were going against the market simply because before this happened, right, these were the undervalued stocks. Yeah. Okay, so it's more of a key of understanding the stocks that you're playing with, right? Having the conviction to understand the stocks, all right, know what you can expect out of these stocks, all right, and then get yourself in. Yeah. Okay, and also, all right, Intel was also left for the day. All right, Intel was also left for the day back here. Right, in the month of November, right, and also in the month of December, right, and that was when I was calling for Intel, right, I was telling people, all right, get yourself into Intel. We've got into Intel a couple of times on this portfolio too, right, so those were the times, but not right now, not when it's at 63, right, why not when it's 63, right, because the PE ratio has shot up, right, as the stock went back higher, right, from 45 to 60, that's a substantial move. Right, and with such a substantial move, right, and it's not too bad of an increase in earnings, yeah, right, but the PE ratio has shot up, right. I'm not interested in playing any overvalued stocks right now in this market, right. The risk and reward is just not there. Yeah, okay, Tanya, I hope I answered that question as well. All right, thank you very much for joining me once again for this market update plus portfolio building for Cashflow live with Terence on Friday evenings over here. All right, I wish all of you a really great weekend ahead. Be very, very careful with where the market is right now because any bullishness today may actually see it sell off again before the closing. All right, there's still a lot of weakness, right? So if there's no sharp turn and a push upwards in the market today, all right, we may see another sell-off to end the week. Right now, what you want to pay attention to is this. Next week, right, they're going to vote again on the stimulus, right? So if the stimulus were to go ahead, right, understand this, if the stimulus is to go ahead, everyone, right, the market needs to push to a new high. All right, if the market doesn't push to a new high, we may have the effect of what we call sell on the news, right? Buy on the rumors, sell on the news. So if the stimulus is a go ahead, it should be a positive for the market, positive for the economy, right? But if it's not taken positively, that means the bears have control right now. Yeah, okay, they've got enough, right? It's a clear sign that the market has enough over here, right? So you want to be very, very careful of what's going ahead into the next week. Yeah. All right, now, thank you very much, everyone. All right, if you like my sharing over here, you find that it's useful, right? Please remember there are 3 buttons at the bottom of this Facebook post. Click on the share buttons over here. Yeah, all right, share it out, leave a post, an analysis on Tesla and how it affects the markets, right? So your friends know what it's about, right? Because I'm sure many of your friends right now are vested into Tesla, right? And get them to find out more about how Tesla, can affect the entire market as a whole. And it's a chain reaction, because when Tesla affects the market will drag on Tesla as well. Yeah, all right. So it's good to know over here. Now, while if any of you are in this session right now and you're not already an option seller and you want to find out more about option selling, for example, the CAH trade that we did today, right? It commanded investment of about 15,000, right? But if you did the same trade in our community over here, you could probably get in for less than $1,000. All right, same trade, same structure, but less than $1,000. So if you want to find out how to be an option seller with much less risk on the table, right, and also much less capital required, right, please send my team an email over here, right? It's in the banner, right? Email my team at b@impossibleinvestors.com, right, and ask for more details about the mentorship programs that we have available right now. Okay, for all of you to jump into, right, and trade live together with us, right, in one of our mentorship programs over here. All right, now, thank you very much, and I'll see all of you right now. Okay, I've got to go back to my gathering over here. All right, thank you very much, everyone. Bye-bye.